In this video, I'm going to be breaking down my entire $18,000 portfolio. And of course, this video is kind of long because I'm going to be explaining my thought process behind every single stock that I own, or at least the bigger positions. And as well as that, I want to make a couple of announcements as well. Like this Robinhood portfolio right here, I am now officially dedicating this as part of my buy and never sell portfolio. So all the stocks that I own in this portfolio, the ones that you'll see very soon, I will never sell ever in this portfolio. So if you come back to my channel in a long time, I will own all these exact same stocks. So first off, I'm going to show you my Robinhood portfolio and all the stocks that I own in there. And of course, a lot of these you've probably never heard of. Like you've probably never heard of ticker symbol CSL or ticker symbol AFG. And that's okay because I can't wait to introduce you to them because I judge a company based off its financial condition and not based off how popular it is or what its volume is like. And in the description, I'm going to have a bunch of timestamps so you can kind of skip through if you maybe don't want to hear about a certain stock. But here, let me show you my MooMoo portfolio. I can't believe it. We're at an all-time high today, actually, of $910 profit and loss. And who can we thank? Well, we can thank ticker symbol POWL since we bought it just about a month ago. Literally a month ago, this stock was $70. Now it's $172. And of course, I can't sell it. Most people would have sold this maybe at a 50% gain or 100% gain. Remember, this portfolio, I'm never allowed to sell it. So who knows what this position could do? It could go up to 200% or something. But anyway, let me show you the stocks that have done bad, because even though this stock has done good, we still have some stocks that have done bad, like ticker symbol PERI. I'm actually, look at this, I've been buying this stock like crazy. And of course, later I'm going to be digging into the financials of this company and showing you why I'm obsessed with this ticker symbol PERI or Perion network. Bill Holdings, Bill.com, we're down 22%. And then EOG Resources. But yeah, let me real quick show you my lifetime profit and loss from every stock in my Robinhood portfolio, of course. Oh yeah, I also own Powell Industries in this portfolio as well. And we're up 119%, just crazy. Oh yeah, and they pay a very small dividend of $6.36. And since we're talking about my dividends, I also have a special dividend coming in from this company right here, which I'll show you the financials later, but a special dividend of $57. They made so much money. They made $290 million of net income, and this special dividend cost them $250 million. So they still have a bunch of money to, do whatever they want with. So here's our lifetime return from every other stock. Luckily, we're in the green on all of our other holdings, but hey, who knows how long that will last. And also, I wanted to give you guys a quick introduction to who I am if you don't know. So this channel is actually my third most important channel. So actually my main channel is called Shaping or Rust Moments. I have, a lot more subscribers on this channel, 40,000. And this is where I actually make most of my money. And if you don't know, this video is in no way for me to brag, I work a job. I'm in college. I take technically 4 classes really in college, but I call it 2. And I also run multiple YouTube channels. I run 3 now. So this one, I've made every thumbnail, every video, but yeah, I really would appreciate if you drop a like on the video. But now let's get back into the stock analysis. I can't wait to show you why I love all the stocks that I own, because if I'm going to hold them forever, I better have some good reasons and they better be financially stable. And trust me, most of them are. Alright guys, so I don't really have a particular order I'm going to analyze these stocks in. So of course, check the timestamps, check the description if there's a certain stock you want to look at or want to hear about. But I'll just go with the stock that I own the most of to the least of. So Powell Industries is the stock that I own the most amount of money in. And that happened on accident because look, it literally went from last month $78 of where I bought it at to now today $171. Absolutely insane. Why is the stock going up so much? Well, just look at their free cash flow per share. Remember, this is the metric we're going to be looking at for most of the video, the free cash flow per share. Why do I like it so much? Because the free cash flow per share includes stock-based compensation because it's on a per share basis. And I like looking at free cash flow because it includes OPEX. And yeah, so anyway, I'll quickly go over these numbers with you. The net income looks just as good as the actual free cash flows. So check this out. They have 0 debt. That's what I said. This company is debt-free. Yeah, here's their normalized diluted EPS. But yeah, they have cash on hand right now of $321 million. Remember, the market cap is just under $2 billion. So $300 million in cash. no debt, and most companies are paying interest. Well, this company is earning interest $4 million actually. And $4 million covers the cost of the dividend. So technically, the dividend here, though it's not that much, technically is completely free. Yeah, the yield is 0.62%. So in all honesty, they can grow their dividend like they could triple their dividend right now, and it would be no problem for Powell Industries. So yeah, that's why I really like them. Oh yeah, so I actually made this little analysis before they reported earnings. So here's a little PE calculation I did, and on a Super Bowl case, if they make $10 a year in EPS at a 21 times earnings, that's $203 a share, which literally isn't crazy. So yeah, that was Powell Industries, the stock that we're up well over 100% on. And the next stock I actually want to show you is actually ticker symbol CSL. Again, you've never heard of this stock, and that's why I can't wait to introduce it to you. And I know some people don't want to invest in it because it's at an all-time high, but right now they have a free cash flow yield of over 5%. And well, first let me show you the free cash flow per share. Most people like to look at the net income per share, which I do like to look at, but I also like to look at the free cash flow per share because that tells you how much they could pay out in dividends. And remember, this company is actually, it's about to be a dividend king. They have 48 years of growing their dividend, and I think they're going to be one of the most popular dividend kings whenever they are a dividend king in a couple years. But look at the dividend growth here. So check this out, 85 cents per share, and the free cash flow per share and net income per share, which is EPS, well covers that. So their payout ratio is literally 20%. Oh yeah, and their assets to liabilities, this may look bad at first, but it's actually fantastic because of what they're doing with their assets. So check this out. Let me show you what they're doing. They're actually buying back an insane amount of stock. So look at this, $300 million in the most recent quarter. And if we actually go to their total common shares outstanding, we can see that you now own 6% more of the company than you did a year ago. So 6.3% more actually. So that's basically a 6.3% non-dividend. And oh yeah, let me show you how much their dividend cost. Their dividend literally cost $41 million. It went down from $42 million last quarter because they're buying back so much stock. So their dividend cost $41 million, and here's their free cash flow. They've never made under $40 million, or the one time they did was back here, but they have a very low, very safe payout ratio, in my opinion. All right, so now I want to talk about ticker symbol AFG. This is another stock that you've probably never heard of, and I can't wait to show it to you. So look at this. They actually just did this special dividend that I showed you on my Robinhood account. That's where I got that $57 worth of dividends. So let me show you the actual dividend history first of this company. So the regular dividend of 71 cents just got raised from 63 cents, but look at these special dividends that they sometimes pay. They actually paid out $16 in that 1 year. So if you were holding that stock 2 years ago, you would have gotten a $16 return just in dividends that year, and the stock price is 126. And look, it's not like the stock price is doing bad. They have a high yield, and the stock is doing good. This is an insurance stock, by the way. Yeah, I'm not really telling you about the company and you know what their industry is, but I'm actually showing you the cash flows and the real numbers you want to look at. So check out this, for example, $756 million. And keep in mind, look 1 year ago, $110 million. That's a really bad number, right? But check this out. Let's actually focus on that. $110 million, and their normal 71-cent dividend, which is a 3% yield, cost $52 million. Why did it cost $186 million? That's because they were paying out the special dividends, the $2.50 dividend. And as you can see in the past, they want this one quarter paid out $1 billion in dividends, which is absolutely crazy. And they actually are buying back their own stock too. So when a company is buying back their own stock and paying dividends, they just have so much extra money. And if we go to their cash right now, they even have $1.23 billion of cash, even after paying the special dividend and even after buying back their own stock. And you can see the retained earnings as well, but they are doing very well. And if we go to their total debt, so look, their debt is going down. Their debt has been flat. So $1.48 billion of debt and $1.23 billion of cash. So their net debt to EBITDA ratio is super low. Of course, I would recommend, of course, this video is not financial advice. I need to quickly say that because this video is getting kind of long. None of this is financial advice. Everything I say, just assume is a lie and all the numbers are fake. All right, so for the next stock, we're kind of doing two because their financials look the exact same. That's ticker symbol Cube, which is CubeSmart. We're up 6% in this portfolio. And ticker symbol PSA or Public Storage. They're both a self-storage REIT. And of course, REITs have to pay out their dividend by law. So that's why a lot of dividend investors love REITs. And specifically, my favorite REIT is Public Storage. So check this out. Their dividend right now is $3 a share. Now, they don't have dividend growth. Like, look, they've kept it at $2 a share for the longest time. But check this out. So $3 a share, which right now is a yield of 4.29%. So who can complain? But if we go to their actual financials and look at their cash flow per share, which is the number REITs pay out the dividend from, which is really their core FFO or the AFFO, which was $4.50. So $4.50 well covers the $3 cost of the dividend. And if we scroll out, they basically have never been under $3. So if you ask me, this is a very safe 4% yielding stock. And if we actually look at how it's performed, sometimes the chart glitches there. It doesn't show the dividends. But look, let me scroll out to the weekly actually. The stock has actually performed amazing, especially since this 2019-2020 level went from $200 all the way up to almost $400, but now it's showing at $279. So it's kind of a good deal right now. All right, so now I want to talk about ticker symbol PERI or Perion Network. And as you can see, they fell quite a bit on their most recent earnings report, like 20%. And the earnings were actually they were good. They were actually very good. So look at this, in my opinion. Look at their cash flow per share of $50 million. Oh, yeah. And just 2 days ago, because their stock fell so much, they announced a $50 million stock buyback program. And that is not much because they literally made $50 million in free cash flow. And it's not even like that is not in net income. They made $39 million in net income. So this company is super profitable. Oh, yeah. Zero debt, by the way. So remember, the market cap was $1.09 billion. This company has zero debt. Let me show you that. So look, no debt. That's why it's blank right there. And cash on hand of $187 million, okay? And they announced a $50 million stock buyback program. But look, it's so cheap. The PEG ratio, price to earnings growth, is at a 0.3 right now. So that's actually why in my Robinhood portfolio, just as kind of a joke, I decided to buy this 2025 call option, or it expires in 2025, but I'm already up 14% on it, but it's literally no money. It's $100, so it's not like that'll change my life. It's $100. But anyway, I'm so bullish on this stock because of its pure financials. It is going to have to completely disconnect from its financial fundamentals for this stock to go under $20 a share. In my opinion, like just the cash on hand. Anyway, I'm clearly super bullish on this and biased because I own it. But what's the next stock we can go over? We can go over DocuSign. Man, DocuSign, the news to get acquired. Remember, our cost basis is right at $42. So we're very safe. We're still up 25%. Can we see that actually? Let's see how much we're up actually. Oh yeah, we're up 26% on DocuSign, or $100. So yeah, it's not much money, but I'm holding this stock forever because of this number right here. What number is it going to be? Of course, the cash flow per share. For these tech stocks, this is what you want to look at. A lot of people look at the net income for tech stocks and they're like, dude, this thing is so unprofitable. And they're not wrong because their net income negative, but we can actually see how they're really doing by looking at their cash flows down here. And if we look at their free cash flow per share, it is at all-time highs, literally all-time highs. And that's what we want. That's the number we want to grow. All right, so here is EOG Resources. Now, this one is one that's a little bit more risky because it's oil-based, natural gas, and that means commodities, and that means very volatile. But check this out, though. Their normal dividend is 91 cents, and this company has a rule. This is why a lot of people love them. They have a rule: 60% of all free cash flow, or this number down here, this $3.1 billion, 60% of this, they will pay out to investors. They will give to investors, either through special dividends, which they have a crazy history of doing special dividends. Just look right there. and through stock buybacks. They just started buying back their own stock. So this is another one of those companies that just have a ton of money that they don't know what to do with. Look, that they decide to do special dividends. So their normal dividend, remember this, their normal dividend costs $494 million. I forgot to show you this. So $494 million, their 3% yield. Look at this number down here. When has it ever been below that number? Except for this one quarter here, and no, not even that quarter in 2022. So literally the only time they've not been able to afford the dividend was this one quarter in 2020. So think about that from a dividend stock, and their payout ratio is 25% as well. So very low payout ratio. Let me show you this. Their debt is down 25% year over year, okay? And they still have, remember, even after paying out special dividends, paying off debt, and the stock buybacks, which we haven't looked at yet, they have $5.28 billion of cash. That's why it says it's down 11% year over year. That's nothing to be concerned about because look, they've been using that cash on stock buybacks and special dividends. So if they didn't do that, they would have $7 billion worth of cash. But anyway, from a pure dividend stock point of view, ticker symbol EOG or EOG Resources, I really like, and for their payout ratio rule, their 60% free cash flow payout ratio rule. What do you guys think about that? All right, guys, so the last stock we're actually going to go over is ticker symbol BILL or BILL Holdings. And as you can see, this stock is just near that all-time low. And let me show you why, or you already know what I'm going to pull up. The cash flow per share, it's up 46% year over year. And the financial condition on this one is actually really good. So look at this. Their balance sheet, 59% asset to liabilities ratio has stayed the same. And here's why you're going to like them. So check this out. Well, they have $1.84 billion of debt, okay? But just in cash, they have $1.58 billion of cash. And guess what that cash is doing? It's actually earning them a lot of interest. $29 million a quarter worth of interest. That is a lot of interest, $29 million a quarter. That's why this number is growing so much. It's $79 million because a lot of that is from interest of customer funds. Guys, thank you so much for watching. My name is Nathan Robert. I hope you guys have a great rest of your day. I'm going to read every single comment. If you leave a comment, I promise I'll see it. Thank you.